The media is in an absolute panic about a gas shortage in Europe. Storage levels are dangerously low and falling dangerously fast. And now the Europeans are considering sanctioning Russian gas, which seems like an odd thing to do given their imports last year were a record amount. My guest today, though, says all of this is overhyped and overblown. James Allen is our energy expert at Southbank Investment Research. James, before we dig into the reasons why the media might want to hype this gas crisis, tell us more about why you say there isn't one in the first place.
Yeah, right. So if we look at where prices were at the start of the year on the TTF, which is Europe's main hub, it's in Holland, it's the main hub for natural gas. Prices hit about 51 euros a megawatt hour, relatively high amount. Since then, they've dropped off 10 to 15%. What we saw was a lot of fear and panic sort of baked into prices at the back end of last year about at the end of the transit deal between Russia and Ukraine. When that happened at the start of the year, prices had reached their peak. But since then, when those flows have stopped flowing, we've seen prices come off. There's only so many times that fear can be baked into prices. So it's been a classic case of buy the rumor, sort of sell the news. So once fact hits the market and the fundamentals are strong, we've seen prices fall off. The market actually is coping pretty well indeed overall. We've had some sort of cold weather in Europe. We had some depletion of gas storage reserves at the back end of last year. But actually now storage levels are looking okay. They're not looking too bad. We've got some milder weather on the way. Short term, it's always a guessing game what's going to happen over the short term. We can see a prolonged piece of unexpected cold weather that could drive up heating demand and suck a lot of inventories out of the storage sites. But if you look at the medium term factor, we've got a lot of US LNG coming online this year. If the market needs that LNG, we will get that LNG, I think. And I think the market's relatively well diversified now to cope with anything that we might expect.
Yeah, you said diversified there. There must be some sort of better word for it, something to do with fungible. The gas market used to be very fragmented and, prices could diverge between places like Europe and the US because it was reliant on pipelines and so on and so forth. And the number of import terminals was limited. The number of tankers was limited. But it seems to me over the last 2 or 3 years, the gas has become a lot more, what is the word I'm looking for here? Liquid sounds ridiculous, but it seems to be able to move greater distances faster to react to arbitrage opportunities, I suppose. The number of import terminals seem to be up and running in order to deal with any sorts of supply issues in one particular place or price spikes in one particular place. Does this mean that we're looking at a world where gas crises can't really happen anymore? A bit like, a local oil crisis can't really happen anymore because supply is able to shift around the world. Is gas becoming like that?
Very much so. We're on that path, really. Exactly what sort of oil went through a generation ago, really. Yeah, we've seen LNG hit the market, and LNG can. Just right now in January, had this cold spell. I think 10 LNG cargoes have diverted, mainly away from Asia to come to Europe. It's just responding to those price signals at the very start of the year. At the same time, we're seeing prices quite subdued, or demand quite subdued in Asia. So it's in the operator's interest to divert those cargoes over to Europe. So that is the nature of the game. Not so long ago, Europe was heavily reliant on Russian pipeline gas. And I used to work on speaking to sort of gas traders every single day, so helping to sort of set OTC prices when I worked for a price reporting agency. If something went wrong with one of those pipelines, whether it was a pipeline from Russia or even an underwater pipe from a platform from Norway in the Norwegian part of the North Sea, you'd see huge price spikes. But now we are quite well diversified now. Europe is becoming increasingly more well diversified. US LNG has risen to very attractive levels. and that really is helping the market cope. Obviously, there's always short term you can get sort of quite a bit of volatility, but I think overall the market is coping quite well. Obviously, storage is always the big question. Europe has a relatively large amount of storage. We did deplete those storage sites so toward the back end of the year, but really we were just clearing the decks. Really, they want to get rid of the expensive gas and sort of reload with cheaper gas. Really, so it was quite savvy inventory management. And that's what happens a lot. That actually drives headlines, because I think there's a bit of a misunderstanding when we do see a quick depletion of storage. That it looks like there's an impending disaster, but they might not want to buy LNG at the expensive rates. They'd rather just deplete those storage sites. It's sort of savvy inventory management as well. So there's a lot going on behind the scenes. I think some of the headlines always, it's very easy for headlines to scream panic and we're running out of gas and one day's gas supply left. The answer is a lot more nuanced, really. I think the markets certainly this year, and certainly really, since we have slashed our pipeline imports to Russia, Europe has actually coped remarkably well. We've had, we have been helped by 2 mild winters. This so far has been a relatively cold winter compared to the last 2 anyway, and the markets, I think, is bearing up quite well.
Let's just clarify that point you made about the inventory management side there. You're arguing that Europeans are using up gas that was purchased at expensive prices and put in storage in order to be able to refill those same gas storage sites over the course of this year when gas prices will be cheaper. And this is a smart way of bringing down your energy costs. And there's a piece of evidence for this, which I found very fascinating, which is that LNG imports are actually at a very low level. You're right, at a 2-year low. And there's 2 ways to interpret that, right? One is there's some sort of problem or crisis with LNG imports. And the other one is that they want to use the gas that's in the storage for the reason that you've explained. What has you so convinced that it is, in fact, this inventory management?
Well, let's think. If we were having a real sort of crisis, or at end of last year, the early part of this year, we had that real big cold snap. We would have seen LNG. Well, certainly in December or November, actually, we would have seen imports massively spike. They didn't. So operators had a choice. They could have got some sort of expensive LNG, or they could have just depleted the reserves they had in storage sites, and they went for that latter option. It was a more economical, cheaper option to go for. So that's just savvy inventory management. If we see a huge depletion of gas reserves coincide with a huge spike in imports, you could say that the market is under some form of strain, but we didn't see that. Now, gas storage levels, they're slightly under, I guess, the 5-year average, but not dramatically so. This isn't a market that's in complete disarray or in shortage. We are seeing some extra cargoes sort of turn up, but fundamentally, actually, the market's looking quite well supplied. We have some relatively mild weather right now across Europe. It's not looking too bad at all.
Why is British Gas telling us then that we only have 1 week's worth of gas storage left, which was the headline, I think, that caught a lot of people's imagination and interest here?
Yeah, right. So the UK market is, they're talking about the Rough storage site, which is the UK's largest storage site. Now, Rough, it used to be an relatively important component of the UK gas supply picture. It was for various sort of political reasons, or strategic reasons, I should say, because there was a much more movement to sort of shorter term gas storage rather than having a big storage site, which wasn't actually being used that much for long range storage. So they decided to sort of scale it back and shut it down. They reopened it on a much more reduced capacity. So the UK storage, the long term storage capacity is actually quite small. We are reliant, or we tap into European gas storage facilities. So we're just a part of the wider European market. So it's a little disingenuous for gas companies to start crying one day or a few days storage left. We're running really, really low. We all know that actually UK is part of an integrated market. There's gas there in Europe if we need it, and likewise there's LNG from the US or elsewhere as well. Not forgetting, of course, Norway pipeline. Pipes from Norway to service us as well. So yeah, a bit disingenuous. That, again, we're seeing, it's another example of a headline really overtaking fundamentals. And the European UK gas market really has been driven by headlines and these big sort of scary headlines. And actually, at some point, I think fundamentals will have to trump. Fundamentals will have to be really revealed. And I think actually that's going to happen at some point relatively soon. I think certainly once, those big sort of US export terminals this year come up and running, I think there could potentially be a big glut of LNG available to the markets. And I think really we could see gas prices overall really start to have a real re-rate lower and come down. So yeah, that for me, that's the big story. Let's see what happens. Short term is always hard to predict, but I think medium term, I think gas prices will have to come down.
It's not just the gas companies and media companies who are going to benefit from these big headlines. You also point out that the storage facilities themselves have an incentive here to go along with these things. And just before we hit the record button, we had an interesting conversation about how the gas markets become very financialized. And there's a very long list of various different markets that have become very financialized, meaning they're dominated by funds and hedge funds and banks and whatever it is, instead of the companies actually dealing with the underlying asset or commodity. Is that part of what's going on here? Is it traders trying to talk their own book?
Exactly right. Yeah, we've seen a huge increase in net length over the last year or two from investment funds, speculators who have, certainly at the TTF, the Dutch hub, who have increased their positions. Actually the commercial entities, those with assets that, a lot of them anyway are selling into these rallies, and they're actually on the other side of the equation. But, the speculators, the investment funds are long. And actually, we've actually started to see some of that length unwind. Back in the last year, early this year, those positions are now sort of rolling over, they're unwinding. And I think there's a potential for, a lot more unwinding of those long positions. And I think that could also incentivize or push further prices down.
The part of this that I find very misleading is it's never quite explained. And I'm sorry to put you on the spot here, because I guess it's a mathematical calculation. It's never quite explained the relationship between the gas that's been stored and the gas that's flowing into, say, the UK using these LNG terminals. So, if British Gas says we've only got a week's worth of supply, but we're capable of importing LNG at a pace that exceeds our potential day-to-day demand, by some large margin, then it wouldn't really matter. Whereas if we have very large storage sites, because we specifically don't have the capacity to import large amounts of LNG quickly, then it would really matter that we only have 1 week of storage. So different parts of Europe are in different parts of different positions on that equation. And like you say, we've become all quite interconnected. But to what extent is it very normal for your gas storage to be depleted every winter anyway, and that is what is supposed to be happening anyway?
Yeah, I mean that is what happens. We see in the warmer months, we see gas storage sites hopefully reach capacity, and they have done very, very successfully over the last few years. So when we hit the heating season, gas storage sites are pretty much full. And, what happens then, obviously, through the cold months, we deplete those reserves to varying degrees, but that's how the market works. So by the end of the winter, we're never completely at ground zero, but they are at X percentage of capacity. That is a completely normal thing that the market has done. And the variables or how fast and how low those storage sites deplete depends on lots of factors. Price, obviously, and driven by sort of things like weather, cold weather, how bad the winter is. But actually, really, the market, those storage sites have done very, very well. Really, they've stopped Europe ever having really a big crisis. They're there as a buffer. They're used smartly by the operators, and so there is a bit of a misunderstanding sometimes. It's very easy to say we have X amount of days left in storage, but there, we see it all the time. We see, when the Russia Ukraine, there's lots of hype and scared stories about that transit deal ending. People are saying, Europe is very unprepared. Actually, it doesn't really matter if you have, 300 days left or 100 days left. If it's above a certain level, we're going to be okay. And it was always above that certain level. And so these headlines are relatively misleading. I think it takes a bit more sort of nuanced understanding of the market to really work out what's going on.
To me, the undercurrent here was that as we become more reliant on wind, the gas demand becomes highly unpredictable because we have these Dunkelflaute, we have these periods of low wind. So I found it very ironic that your very insightful piece was entitled that the gas crisis is overblown because it's the lack of wind that's implicitly triggering things here. Is there anything to that narrative that as the share of wind in our electricity mix grows, therefore the demand for gas becomes unpredictable because it becomes weather dependent in the sense that the gas is the backup fuel?
Very much so. I mean, we can't deny that. Obviously, we saw. I think when was it? In November, when we had that period of very low winds in Germany, and actually we saw gas was actually the fuel that sort of, in inverted commas, I'm going to say, it came to the rescue. It ramped up. This is obviously in the power sector. So, gas-fired power plants, ramped up in response to less wind than expected. So there is certainly a relationship. I mean, that one was quite unique because it lasted a bit longer than normal. Actually, normally you do get periods of lower wind. They don't normally last that long. Obviously, the idea and the goal is once we have an improvement in sort of long range storage and batteries and what for, we won't be so reliant on gas filling those breaches. We're seeing that elsewhere when we're getting sort of a lot of batteries on the grid. Look at California, that gas demand isn't so pronounced. Those peaks isn't so pronounced. So that will happen in other markets once we see more and more batteries come onto the grid as well. So certainly right now there is that relationship between wind or a lack of wind, and we see peaks in gas in the power sector.
It's also, each of these are examples of the financial markets, energy markets working in the sense that, higher prices are the cure for higher prices. It encourages the investments that make gas so fungible or diversified around the world, which incentivizes the batteries that make wind a bit more stable. Last but not least, I want to ask you about some developments of gas licenses and to some extent oil as well that have been issued in Norway. They've issued their gas and oil drilling licenses for the year. We've got the Americans, on the one hand, trying to ban drilling. I believe it's on federal lands under Biden, whereas Trump is hoping to, I think, reverse that and expand oil and gas drilling. It feels to me like everyone's shifting to a more pro-fossil fuel stance, except us, except the UK. It reminds me of that film, There Will Be Blood, where it's a very violent scene where the oil man explains that he was able to drill his neighbor's oil out from underneath him because of drainage or seepage or something along those lines. It feels like the Norwegians are emptying the North Sea, and we are importing that oil and gas from the Norwegians instead of just producing it ourselves. Do you think there's a change coming in British government policy as it feels like everyone around us is shifting towards producing more oil and gas? And do you think they've got it right or wrong to refuse to produce that oil and gas in the meantime?
Yeah, I don't think there's a change coming. I mean, we have now Labour in charge. Labour have been quite clear what they're going to do. They're going to, keep on track. They're not going to sort of give out too many more licenses for operators in the North Sea. That's not going to change. I don't think the reserves actually now in the North Sea, in the UK part of the North Sea, they've dwindled a lot. So there's not actually that much gas left. So, there is an argument, obviously, we should tap what is remaining, but we've got to remember that's going to take a long time to do. Who knows where gas demand is going to be in a decade's time, so there's a risk there. that gas that we might that might be tapped out of UK waters, there's no guarantee it'll move prices. It's the marginal term. There's not enough gas really to really move global markets whatsoever. There's no guarantee, certainly with these operators and companies in that part of the North Sea. They're all multinational companies. There's no guarantee that gas will be sold into the UK. That's for sure. So all those reasons, I can't really see, certainly under Labour, Starmer reversing that anytime soon. My argument really, if people want to do it, go for it, great. But there's a lot of risk. There's a lot of risk there, and personally, I would be surprised, how much gas actually would end up being tapped out of the North Sea, even if Starmer said or anyone said, you guys go for it. Here's some licenses. Let's see. I mean, it's going to take a long time to get that gas out of the waters, basically.
And the media's angle on this, like you say, would be misleading because the idea that it would push gas prices down in the UK if we produce more of our own gas is simply not what would happen. It's a global market. Ask any Australian about this, and they can explain to you that a country can have a severe local gas shortage while producing an absolutely frightening amount of gas, and that gas prices locally can be extremely high, despite the fact that you export an extraordinary amount of gas. What would happen, though, is that the impact of having to import all of this energy from another country would have an impact on the trade balance of the UK. It would allow us to stop importing and having to pay for those imports, which would be, on a net basis, I think, an interesting impact on, say, the pound and perhaps even monetary policy and some other issues. But what about the fact that everyone else is moving towards production? If the US does drill, baby, drill, and start to produce significantly more gas, if the Norwegians, as it seems, they're happy to do, are producing lots of gas, is there the prospect here of these last few years of gas shortages turning into a gas glut?
Well, I mean, there's a bit misleading about sort of Trump drill, baby, drilling. We've actually seen Biden drill, baby, drilling. I mean, gas production actually under Biden has actually been extremely high. I think that's late last year, that's 7-year high or something. What we see is actually, in some ways, markets will trump whatever sort of Trump will do or whatever presidents can do. Markets will dictate really what happens. They'll incentivize operators. We've seen quite low gas prices in the US, and actually a lot of the operators on the ground saying no matter what Trump does, it's not really going to incentivize to increase production any more than we are already. So, we'll see what happens in the US, and I think, we'll see a similar scenario elsewhere. I think the UK, I think you're right. We are now sort of, we have a leftish government now, unlike a lot of places, certainly in Europe, US. We're not going to reverse that decision, I don't think, in terms of gas. I think we have enough options in terms of to source our gas. I think the market will there's enough diversified supply to help the UK get through the worst of winter. And I think the long-term outlook, over 10, 20 years of gas is questionable with the rise of renewables. So I think it'll be a brave government or a brave companies really to invest huge amounts of gas of money or capex into UK gas facilities right now, with that sort of question mark in the future. So all in all, I don't think the market's dynamics are going to change too much in the UK.
Well, I hope we've alleviated some people's fears about a gas crisis. I hope that you will be able to see through some of these headlines and some of this analysis in the future, as I am sure it will be repeated each time the wind levels drop in some parts of Europe and the renewables stop producing as much as they can. It seems to me, in summary, actually, that the free market has sort of gone and solved some of the problems that some questionable geopolitical energy policy, especially from Europe, created and did cause some discomfort in 2022, if only financial. And actually, I did cause some serious discomfort in the parts of the world that I guess Europe bought their gas from. But nevertheless, this problem is unlikely to come back to bite in the future. James Allen, thanks very much for joining us. And to everyone at home, thanks for watching.